What is the biggest driver? Because that need to consolidate has been around. Is it just that the regulation is letting the banks do this now?
Well, scale has never been more important. And to put things in context, the bank that just sold, it would have taken them a decade and a half of spending to equal what JP Morgan's going to be spending just on technology this year. So it's never been more competitive. But also the regulatory environment, it suppressed the level of bank mergers. I think that was a huge mistake. It was just a gift to Jamie Dimon, like just increased the moats around the business. And then the regulators are approving deals, faster with more certainty, and I think that's a good step. So look, there's a need for economies of scale. There's an ability with regulations, and then we just had this big merger yesterday. I think this is the start of a new era for bank consolidation. I think the window is literally now.
So the question then is, who's next, Mike? And how far do we go? I mean, there's like 4,000 or 5,000 banks in America, right?
Yeah, 4,600 banks in the U.S., down from 15,000, a few decades ago. And I think that number could be cut in half over the next decade. And to say, who's next, I resurrected my bank takeover model from the 1990s when we had a lot of consolidation, and we have a new report out today. And what we do is we look at book value and adjust that for hidden book value. Accounting has its shortfalls, so we mark to market the balance sheet, and I found that hidden book value typically equals 50% more than book value. So if you look at stock prices relative to franchise value, several banks trade below their franchise values even before an acquisition. So if there's an acquisition or not, then I think these stocks should go higher, like Bank United or Bank of California or Associated. Those are three banks all trading below their franchise value.
Bank United, Bank of California, and
Associated.
Well, a lot of these deals, the majority that we've seen take place are smaller regionals or super regionals buying another regional bank. Santander was different yesterday, coming in to buy an American bank. Do you think that's a rarity, or could we see more deals that look like that, more cross-border deals, or more bigger banks buying smaller banks?
Well, that was a surprise to many people. Banco Santander, I mean, everyone asked, who's the buyer? Not many people mentioned Banco Santander. So it's a reminder that it's not just U.S. banks that are buyers. There's foreign banks. This is a super attractive economy with great capital markets. The U.S. is still the place to be. And so I think there's pent-up demand. And the sellers, by the way, banks really size 20 through 100, stared into the abyss 3 years ago. Remember with the regional bank failures? So if I were them, I would think very seriously about, given the good economy and interest rates are fine, and especially the political and regulatory environment, this is a moment when they probably should think about selling. And long term, can they compete against the Goliaths of the world? So Goliath is winning is still our theme, but we have a barbell strategy that's consistent with my weightlifting and everything else. But on the one hand, we have the Goliath like Citigroup, which is my number one pick. And on the other end, we have kind of this takeover basket with those three names and others.
By the way, I just want to point out that there was a report a few months ago that Chris Waller could lift, and I'm talking about deadlift, right? Or maybe a squat, 300 pounds. It wasn't a bench, I'm sure. But you're up to what, like 450? 457?
Yeah, so Governor Waller has some videos online of deadlifting over 300 pounds, which is amazing. But I'll say I've passed 450 pounds. So if he were considered for the Fed chair, maybe I could be considered if I lift more. I'm not sure what the criteria are.
I want to just ask about the new Fed chair, because we did find out Kevin Warsh is, if and when he is approved by the Senate, going to come into that position. How will that affect the regulatory outlook for M&A? Do we know what Warsh's take on that is?
Well, Vice Chairman Michelle Bowman has been very clear that regulation has had too much mission creep. So when I worked at the Fed 35 years ago, the rules were simple, but not that effective. Then they became complex and strong, and I think the goal now is to make them simpler and strong. So eliminate the bureaucracy, eliminate the red tape, make the rules for capital clear, and focus on safety and soundness. That's the core mandate. And everything else, let banks be banks again. So it creates the potential that banks can do more lending, and also the ability to pursue more deals with more certainty on a shorter time frame.
Is there not this fear, though, that you get change at the midterms, a changing administration, and things go backwards?
I don't think they go backwards, but that's the other reason. The moment is now. If you're looking to do bank deals, do it before the midterms. I think you really have a couple years. And with the change in presidency, change in overseers, the sentiment can change. But the moment's now, the next 6 months. If you're a bank out there, I don't care who you are, you're thinking about either buying or selling, or how do you fit in this consolidation puzzle.